50 on the 620 order, 1075 put.
Okay, so we're a ways from getting hit, right?
Yeah, about $1.50.
Okay, here we are on the opening bell with Italy down the Dow 197. You got Nasdaq 100 minus 52. Look at that opening there. Oh, MMTs, look at that reversal, 64 handles. What we're going to look for is there a possible capitulation on the open? We'll tell you. We have marked down these calls. Give me the bids, MMTs, on these that we have out here.
The Google 605, we're at 5 at 270. The Google 600, we're 3 at 490.
Okay. And so we're close to getting hit at 490?
No, we're $4 off of that.
Okay, so that's on the 600. We're 830 by 9. They marked them down. And we're doing this live, right? And we're taking a look at the equity. What does the equity trend read at the current state in the platform?
We are at 96%, 83, 100.
Whoa. So we go to 603. I'm going to launch my MMT, SMF MMT trader.
Oh, Jesus.
Okay. And watch. I am launching it now. Look at the selling. So, listen, folks. Now, Tom, you still have a profit that you can always take and get back in again. So 1170 was the low. And you may have to sell into it, unfortunately. Let's see that, remember, Google was 616.50, and the fund managers have got to come in off of that bottom. Now, Rick, what kind of IR do you have?
Google has an IR of 89 right now, 85, 89,
I seem
96.
Okay, so that's strong.
It is strong. Had a big green bar right off the bell.
Well, and it's 3-minute bar, isn't it?
That is correct. It was worth about $3.
It was off of that low, wasn't it?
Yes.
To that high of 606. Now, what we're looking for is you got lots of selling with that Italy. Look at that haircut. Look at that.
Rolling over now, we're at 60.
Look at that 1248.20 on that S&P. This is all on the opening bell. It's all about capitulation, Italy debt crisis. Again, it's everything that you were trained on over the last period of there in the summer. Mario did train you on this, did he not?
Sure did, 35 IR.
Now, Tom, you can come out with a profit up here at the highs.
Okay, I'm hit on ATVI.
No one says you have to give that high up here of 1369. You could be limiting out right now at 1310 and taking your money and then buying lower. That's what you have to do with an austerity move. Take a look at Google.
22 on Google.
All right, so it's totally changed direction. Here's the chart. Here's that left elbow gap down when they mark down the Italy, and it's trying to put in a bottom. Here, let's do the diamonds. It's live here in the video, but look at it. It looks like this teeny line up here is a problem. This is where the rally started the other day. From here, 614. That's the Italy markdown. That's the index markdown on the opening bell. That's the left elbow. That's that attempted low right here. 604.70 to 603.69 low, 606 on the high. One of the things that we always do is get wholesale bids, and we're watching this $600 call. It's important to know that in austerity, when you still have a profit, we can sell and buy lower. So put a bid out here on this one at $9.70.
Okay, I sold those two at 13.10.
All right, now put these out at 9.7 and set alarms, because if we come down to the 1120 by 1140 area and hold, we could buy in there. Who knows? It's all going to be how Google responds and how the diamonds here. We're at 75. We're cooking. We're cooking that markdown. And so, Tom, other MMTs, we can see where the opening bell is. S&P 100 is even getting a haircut. Okay? And it's 6 minutes to our opening bell in the United States of America versus Italy and the rest of Europe. And once again, It's been a mess. Italy FTSE MIB is down minus 541.69 to 15,122 and some change. Gold is only down 3.5. It's working. Crude is down. That WTI crude is down $1.29 at 95.51. The Dow right now, well, it's got that negative 1.8% left elbow gap down. So in the Google chart, what we're looking for is what is that markdown to this price level here and how it goes back up in value to buy and sell. And basically this thing here is marked down from 1760 to 1170. That's the markdown. Let's do the math. So -6 ratio to 1170 it held. And now on this opening bell in 7 minutes on this option, and you only have 246,000 shares traded on Google, 247 now on the opening bell. The thing about it is we're going to try to buy a put contract over here. This is at 1119 put. That marked it down to 295. 880 is on the high. What's the limit order for this one? We have a limit order in MMTs.
1200 put. We have an order at 550.
Okay, so are we retail? No. Drop the 550 just in case we do get an intraday bounce. When I say we're bouncing on the S&P, you would drop your next limit order to, let's say, 3.75 or 3.80 here. And that would be a dollar premium to a wholesale entry. The low 8, the high 8, 64 volume traded on that opening bell.
Can you repeat that order?
710 by 890. If we bounce on the S&P, we'd want to put these around 3. We'd put them at 3.80. That we would change the bid when the S&P would bounce. That would be the secondary bid, 3.80. It's still a premium to the close, but we're going to see how this Italy deal is going to work out on the opening bell. And the thing about it is Italy has gone through horrendous yields that set off systemic emotional events in the buy and sell side of the U.S. transaction exchange model and worldwide models, financial models, are at risk. Once again, it's live from SMF on 11/9 of 2011 at 6:39 a.m. Pacific Standard Time, 8 minutes and a few seconds into the opening bell. We're about 9 minutes into that opening bell, and we can see right here what that markdown in the price on Google's trying to do. What is it trying to do? It's doing what it should do. It's trying to make a 369, and there it is at 93. Watch that ratio. That ratio, negative 80, equaled $8 minus $8.65 was the markdown with the Italy crisis. This is the markdown with the Italy crisis. And what are we going to do? As that contagion runs rampant and wild, we're going to buy the best of the breed and let those fund managers, they better get net long. I put an outperform on it. Heck, for 2010 and 2011, we're still in 2011, 10 minutes on 11/9 of 2011. But the thing about it is where you people are going to start buying this good quality name and coming in here. This was at 616 last night when they were talking it up. Once again, listen, even with the austerity in the tape, is where they mark these things down. You can clearly see here live in the MMT platform, SMF here. It tells you SMF MMT Trader Google 3 minute. We know it. This is our beautiful platform that we built over many years. And look at the haircut down here on the indexes. They're all right here in the platform. Look at the fear indicator. The VIX is in your platform, up 5.9%. And the VXN fear indicator, well, I told you, That fear indicator, again, is playing in. And this is a 12-minute opening bell with the Italian crisis marking Google price down, and where the very best entries on how this thing will set up, it went down -8. That was 12.85 teenies at 67 cents a teeny. That equaled a markdown of $8.65 during that markdown. This is the Italian austerity in here right now. And once again, MMTs and the rest of the innocent people, it's about how to buy quality. It's about fear that you see here. It's about worldwide banking systems collapsing because, as SMF had clearly said, go back to our 2008 blogs, 2009 and 2010, 2011. Look at some of the major forecasts and some of the older radio shows that are archived. That was on the worldwide events and what was going to happen and the reasons why. So here we are. There's your Italy on the opening bell. And right now, you are roughly 12 minutes into this opening bell. And once again, little ATVI, it bounced off at 13.13 to 13.40. Yeah, you would have had to have 1,000 shares, but it was still a good profit on that one. Now, 51, I'm at 0.67. I'm trading -80. And the thing about it is the contagion keeps coming back in the first 12 minutes of the U.S. opening exchanges and the SMF MMT traders live here in action on 11/9/2011. Guess what date? It's that date. It's here and it's now. It's real. And the thing about it is, it's all going to be about the strength of it and how these original bottoms may or may not hold. And they're weak because at 74, of course, you're going toward the low of 80. And you can see that the low, the markdown was 865 on the open, and you went up 1 teeny, 2 teeny, 3 teenies, and you're 1 teeny, 2 teeny, 3 teenies right back down here. These lines were calculated before they opened. They don't lie. They're that accurate. Now, either you get the buy side. That's a 15-minute opening bell on Google on the Italian austerity, on the markdown of the Italian bonds getting out of whack. And that whole situation isn't looking good. But what is the value that you can buy in the United States? Well, it's right here. It's right here. And the thing about it is that range is popping back to 80. Look at my A. Well, what do you mean popping? My ratio is at 53. Yeah, I would say so. It's not at toward 80. It was just at 74. That thing just popped 20 handles. That's how you got that buy action bar in that name. Once again, devalidator. 1 teeny, 2 teeny, 3 teenies at 67 teenies. You've got to see more green bars at the bottom of that markdown. Now let's go to the option. And you're right back up here at the highs. You're at 5.5. If you go below 50, you're going to go up. If this gets down toward minus being 10 on the day, from minus 80, that's a 70 difference. The price is trying to do the validation. Those live ass diamonds right here is, how do I trade a markdown, left elbow gap down, and how does it get made within the opening price structure of a very, very bad event that happened in Italy in their banking system? Woo. They should have had that on the Halloween day. That was already coming. We already knew it at some point. The point of it is, though, if you have quality and they mark them down and good quality sets itself up, you can see how that Dow is just getting killed. But you can also see that the $600 call that I gave Tom to bid out on, and we want to watch these calls. There they are. Here's that 605 call. They've marked it down. Give me the limit order, everybody, on the 605 call.
605's at 270.
All right. We'll stay in there. We got down to our 4.8. Look at here. I'm watching these put contracts on the S&P. That's that 1217. That's that 1200 put. that was marked down yesterday and closed at 1870. Look at that gap high at 28.50. Somebody set me an alarm here on this 1217, 1200 put. Set me an alarm, falls to 22.50. Another one of you set me one, falls to 25, and another one set me one if it falls down to 19.80 and 20.5 in this thing. We have the selling model. You have the weakness coming back into Google, obviously. The buyer and the seller will have a high emotional event. The people who look for good quality outside of the Italy problem would be looking at how do I buy and get performance out of good quality, and that would be Google. We've been featuring it now for the last several months throughout this whole process up to yesterday's closing high of 612.34, and how you would have to go through there and how you would have to have a 3 half delta breakout day as it did. Once again, here is the markdown, 270 on that Dow. All right, that's the opening bell from the pre-market futures tape. It's going to go under its own section, and it'll go under the Italian debt crisis pre-market special opening features, how to buy marked down prices at wholesale bids with good quality. We all know that Tom is out here to buy at 970 on the $600 call. We got down to 480 on the 605. They closed at 980. You can see they took $5 out of it. That's a good markdown. That's negative $5. That's with the stock holding that low, but it's kind of weak at the moment. So we'll just go through that opening bell. And once again, we'll conclude the chart that this is that opening bell right here from that markdown price. Once again, it's how do I get my entries, and what kind of system allows me to know that I'm back at 0.73. That's why I got a weak bottom. But when we bounced, that ratio did get down there in this video at 0.55. So now we're close to minus 0.80. You can see the markdown right now is minus $7.71 to that teeny line. Opening bell Google. The calls that we have below the market are all in play. They're all at wholesale prices. We made our adjustments accordingly. And now we are going to pick off the good quality.